Hello and welcome to this edition of Money in Motion video blog. This is Dan Perkins and thanks for watching. Well, it's the end of September, end of another quarter, beginning of a new one, and it's been an interesting summer. We thought the world was going to come to end as oil prices dropped in the second quarter and then they recovered. And in the last few weeks we've seen a significant recovery as the Saudis have decided that they no longer want to have a war with the United States over oil. And as a result, we're going to see potentially, starting in November, production cuts in OPEC to allow the inventories to be worked off and perhaps let prices rise. Right now we're trading around 49 and a quarter. I would expect by year end that we would be trading in the $50 to $55 range, looking at 2017, a range of about $60, maybe $65, more towards the end of the first year, or the end of the year in 2017. So we're continuing to watch that. We have an unfortunate development this week in Europe in the fact that Deutsche Bank is under very significant pressure, and it had put a lot of pressure on all the banking stocks all over the world. The Department of Justice in the United States issued a fine of $16 billion, which was approximately 30% of the net capital of the bank, which took it down to about $16 billion and about $160 billion in debt, so a 10-to-1 ratio, which is unacceptable. So now the discussion is, will the German central bank and the German government step in and provide some liquidity for Deutsche Bank? Now, I want to say that this is not like what happened in 2008 in the mortgage meltdown, but is a result of the 2008 mortgage meltdown. The fine issued by the Justice Department is their part in dealing with the sale of subprime mortgages throughout Europe. My guess is that the German government, even though it's relatively close to a general election, will step in and provide liquidity for Deutsche Bank, which means that the stock will probably rise dramatically off of its perhaps all-time low. But in order to do that, Angela Merkel and her government are going to have to make some decisions about where they're going to go in the future, assuming that she's re-elected, which is not necessarily in the bag at the moment. So there's a reluctance in the German government to do anything before the election, but the markets are pressuring the central government to do something right away. My guess is that they'll probably do something right away rather than risk the possibility of a default by Deutsche Bank. The markets continue to be extremely volatile. The Fed has no clue about what it wants to do. As I said in my last video, one of the most difficult things for me over this past year has been dealing with the gyrations of the Federal Reserve. We were told that they were going to raise interest rates in September. The numbers looked like it was a done deal, and yet when the September Open Market Committee meeting came, they chose not to raise rates, pushed it off to at least December. I think part of it may have been a desire not to want to get involved in the political process of electing president. I don't know whether that was for Hillary or against Donald, I'm not quite sure. But the Fed then told us, well, we're not going to raise rates, and here we go again. The markets rallied a little bit, and now we're talking again about the possibility of raising interest rates. It has been very, very difficult to anticipate. I know we have cash, and I know I've been talking about putting it to work. But till I get a clearer picture of what the Fed's going to do, I don't want to walk in and guarantee a loss. So I'm sitting on the cash, I'm watching what's going on, trying to figure out where the Fed's going, trying to figure out what's going to happen to the economy. GDP came out yesterday at 1.4, which is very anemic, not a rationale for the Fed to raise rates. So we have to kind of just sit on our powder for another couple of more months to see what happens with the economy and what happens with the outcome of the election. If there's anything significant that comes up, I'll be sure and let you know. But for right now, sit tight, have a nice drink, and enjoy the fall weather. This is Dan Perkins. Thanks for watching.